Hello and welcome back to another video on our IWG YouTube channel. My name is Axel Meyerifer. I'm the founder of ILD Wealth Grower and the host for this video today. So I want to talk to you a little bit about the situation that we're kind of working our way into from a government and regulatory perspective. And you have probably heard a bunch about it in the news, in social media, in the news media, on TV and so forth and so forth. And I personally really don't like when topics, even though we are very deeply involved in real estate investing and housing and all that kind of stuff, and you have seen a lot of videos that we have made about it, but what I don't like is when these things get politicized, right? What is the right or the wrong political decision to make, or how should things look like? But the fact of the matter is, what the media is pointing out is that during the pandemic, or shortly after the pandemic started, two things were done by the government in the Trump administration, but it was almost unanimous votes. So it's not really whether it's Democrat or Republican, Trump or Biden. What they did is they basically realized when we shut down the economy, it's very hard for all the people that got laid off, lost their jobs, the businesses that stopped operating, to expect them to make regular payments when it's not clear that they really have regular income. So the one thing that was actually put into a law was to say you have the right to go to the bank that you actually have a mortgage with and tell them that you are affected by the pandemic and that you want to have relief from the payments that you are required to do. That relief, that term for that relief is called forbearance. And what it means is basically you are still the owner, you're still occupying the property, everything remains the same, but your payments are stopped. And at the beginning when that law was put in place, that period was for 12 months. Now, the very end of the Trump administration and relatively early in the Biden administration, each of them extended it for another 3 months. So the total is 18 months. And this forbearance law is going to come to an end right now, the way it looks like, at the end of September. So does that mean it couldn't be extended any further? No, it could be extended again, but that's currently what we know, and that's what the media are talking about. There is this catastrophe happening when this law ends to be in effect at the end of September. The other one that is also coming into play and that was also put in place right when the pandemic started was the eviction law. And this was based on the Center for Disease Control, or CDC, as you have probably heard many times, even too many times. They basically said, we have a national health crisis. And if somebody is currently safe in a property, in an apartment, in a condo, in a house, as a renter, as a tenant, and just because they can't make their payments, they're going to be thrown out on the street, the risk of them getting infected by COVID is massively increased, so that should be avoided. And so the government, the Trump administration, again, with huge bipartisan support, said we are no longer allowing landlords to evict their tenants if they don't get a payment. So that law actually ends tomorrow on July 31st and means that evictions are possible again. Now, to soften the blow, if we first look at the eviction moratorium ending, to soften the blow to anybody who has, for a certain amount of time during this pandemic, I don't think there's really realistically anybody out there who hasn't made any payments for 18 months or 12 months or so. But it's understandable that maybe some people got laid off for a certain period of time and now they have a job again and now they started paying again. So there's more or less a certain amount of time that they didn't make any payments. And the question becomes either from property management, which is what we're having in our investment properties, or directly if you're basically renting directly from a landlord who owns the property, what can we do with these unpaid rental payments? Now, one thing that the government has done, the Biden administration a little bit more than Trump, is put a really substantial amount of money to help people to get basically government money to make up these missed payments that they couldn't make if they can show a good reason why they couldn't make those payments. The issue with that is, and as an owner, as an investor, we are working with our property management companies to help them get all the paperwork in place because we are the owners to apply for these rent relief programs. And Like with other programs that have been done for businesses, this one is also in this case done for investors and landlords. It's been administered in a horrible way. And this is my opinion, but I think there's a lot of proof to it too. What do I mean by that? Instead of saying this is a federal program and here's a federal agency that any property manager or any landlord can fill out an online application to show, here's my tenant, here's my property, here is the proof that I own the property, and here is the amount of rent missing, and here's my bank account. So maybe get even some kind of letter or something from the tenant to say, yes, it's true that I missed these payments. Fill this all out in half an hour online, and that federal agency has access to that federal money and pays the landlord that missed payment. You issue a letter to your tenant to say you're all caught up, you're all good with your payments, and we can just keep moving on. But what did they do? No, they had to say, for some strange reason that I never will understand, even though people make arguments for it, that this is somehow suddenly a state level thing. And so now each state has different rules. Each state has the freedom to decide how are they actually going to use this government federal money that is supposed to go to the tenants that didn't make all the payments to make the landlords whole again and hopefully salvage these lease agreements. And you can imagine, I mean, we have properties in several states. Do I really look forward, or do I have any significant interest to work with each different state, with each different thing? And some states are so slow. They can't even collect their property tax under normal circumstances, let alone deal with a new system and a new approach that has new rules and so forth and so forth. So there are, I believe, a whole bunch of tenants who would be eligible to get this money to make them whole and rid them of this burden of unpaid lease payments or rent payments. But I'm not very optimistic that a lot of the states will actually handle it very well. What does that mean when I said earlier that the eviction moratorium ends tomorrow on July 31st? What it means is that it is very likely, especially in larger places like big apartment complexes and stuff like that, and especially for people who have substantial amounts of money outstanding, like if you didn't pay for 5-6 months or even more than that, even though I don't think that's very common, but it probably exists. Larger organizations will say, we just go by the rules. If they didn't apply for rent relief, if they don't have the money, if they don't show any kind of indication that we're going to be made whole, meaning being paid pretty soon, then we're just going to basically start eviction proceedings. And people will be thrown on the street as we're approaching the fall and into the winter time, with probably very little chance to do something. And the real tragedy of that particular thing is not only that the laws are all followed and there are still victims, meaning the people who get evicted, but if you think from the day that the pandemic started to today, sometime March 2020 to today, and maybe 3 to 6 months into the future as these evictions are being processed, you will find out that, for example, rents and prices for houses have massively increased. If you look at the inflation of rent in the last 3 to 6 months, it's astronomical. So if somebody that may have lived in a place for, let's say, $600,000, $700,000 a month gets literally evicted, they might find a similar place, which you would have to expect that they need at least the same kind of place that they're in right now, and would have to come up with $1,500. Now, how does that make any sense? If they were not able to get whole, if they were not able to tap into these government funds, if they were not able to come up and pay the $1,000, now you think they're going to pay the $1,500. So you're basically breeding potentially more and more homeless people into the winter time, which is also a critical time if we don't really have fully overcome the pandemic yet, to actually be on the streets with their families and with the few belongings that they might still have. I think socially completely unconscionable, and I don't care what your name is and whether you're the president or what party you belong to let something like that happen. First, by making the states responsible for giving the money out. Number two, to establish a really crazy process. And number three, to allow the evictions to happen without really knowing that there is a way to avoid it is not very good or acceptable or anything like that in my book. So that's what the media means when they say the eviction moratorium is ending. Now, does that mean that there will be some impact on the rents that we can collect as investors in residential real estate? No, because there's so few properties out there, and the amount of people that are actually falling into this eviction basket is comparatively small, and the vast majority also live in multifamily, not in single-family homes. So the impact to our investment properties will be minor, and I can tell you throughout the whole pandemic, none of our properties ever had a rent payment missed or any kind of negative impact. And if there were any programs that the government put out that might be useful for our tenants or our property managers, we applied to them and worked with them and got it all in place. So I don't foresee any impact neither on the increase of rent levels or otherwise. And there's nobody that I'm aware of that would be evicted in our field. But in multifamily places, especially in larger city, that is a real thing that's coming. So that's the one thing, the eviction moratorium. Now, the other thing with the forbearance ending in September, some people say, oh, when the forbearance ends, then we're going to have all these foreclosures and the housing market will completely reverse, blah, blah, blah. I don't believe so. Now, here's the reason why. Number one, it started out when the pandemic came up, how many people did actually apply for these forbearance programs that were allowed? And that number was somewhere between 8 to 10 million, which is a very, very substantial number of people, much more than we ever had in the past. But when you look over time, as the economy started to recover, as the states one by one started to open up again, and vaccinations started to increase and so forth, the number of mortgages that are still in forbearance has continuously gone down. And I think the latest number that I've seen right now is about 1.4 million. So that's one thing. So the number of properties is substantially lower. Now, are there some in these 1.4 million who probably would really have a hard time when their payments start again, that they would actually be able to make the payments when they haven't done any payments for 12, 14, 18 months? There are some. But I think the vast majority of even the ones that are still remaining are aware that they will have to start payments again at some point. And the other point that is really, really important in this context is we had a situation, and this is why the media is freaking out about it, no matter what their political affiliation is. We had a situation during the financial crisis in 2008 to 10 where we had forbearance and then foreclosures as well. But the situation there was that the banks had not really realized what it means when the banks suddenly own a large number of properties when that's really not their business. They're dealing with moving money back and forth and making money on loans and stuff like that. They're not good property managers. They're not good real estate agents or anything like that. So there weren't as many lessons learned than I would have liked to see from the financial crisis. But I believe very strongly that one of the lessons that was learned was that banks don't want to own properties out of foreclosures. So there is an incentive for them to say, well, we don't want to own these properties, so what can we do? That's one thing. So there is no significant interest to foreclose on someone. Now, the other thing is the government made actually some provisions when they put this forbearance rule in that really, really makes the likelihood of any kind of impact even smaller. And those provisions basically say you, as the person who had their mortgage or currently has their mortgage on forbearance, have a few different options. So one thing we all know is our properties all increase, regardless where you were in the last year and a half, all increase significantly in value, while at the same time interest rates have gone down quite a bit. So what you can do is you can go and call your bank and say, hey, my mortgage is on forbearance and I want to basically refinance my mortgage. Now, there are some things that aren't very easy, but that is one thing that the banks can do to allow you to do this, for one, because then you can show, if you do this at a lower interest rate and with the equity in your property, the deal becomes better for the bank. Why? Let me give you a quick example. Let's say you have a house that you bought for $200,000 and you put 20% down, so that's $40,000 and you got a $160,000 mortgage. And then you put that mortgage on forbearance and didn't make any payments. And let's just say, for easy calculation, the accumulated interest for all the payments that you didn't make was $10,000. So you have now the $160,000 plus the $10,000 of unpaid interest. But what happened to that $200,000 property in the last year and a half. It is very, very, very likely that this property is worth at least $250,000, maybe even more than that. Right? So if you say, I want to refinance it, you would refinance your $160,000 or $170,000 current balance, and the bank would get a mortgage that is secured by a $250,000 house rather than a $200,000 house. So it's safer for them. You might actually benefit because if you get to a point where your mortgage amount, your $170,000 versus your $250,000 value is only 80% of the market value right now, then you don't have to pay mortgage insurance, which you probably had to pay in your previous mortgage. That can save you a couple $100, and then add the lower interest rate that you're probably going to get. And your mortgage, even though your house is much more worth, could be significantly lower, and you could potentially show with the money that I'm now making in my past job, the same job I had before, or maybe even a new job that I have, I can easier now make these payments than if I were to just continue with my current mortgage that I have. So that's one thing why a lot of these mortgages that are in forbearance would be potentially converted to a refinance. The other option that you also have, and this is by government rule, they said, okay, anybody who got their money through federal funding, which means an FHA loan, a Fannie loan, a Freddie loan, and so forth, which is, by the way, about 90% of all the mortgage loans out there. If you got one of those mortgages, then you will have the right to ask your lender to put these missed payments at the end of your term. So let's say you got a 30-year mortgage and you're 3 or 4 years in, then you suddenly now switch to a 31-year mortgage instead of 30 years, and those missed payments will just be added to the end. No interest, no nothing, you just add it to the end. Now, the benefit of that is you're basically restarting your mortgage. You're making the payments as you did before you put it on forbearance, and there's no negative impact, no impact on your credit score, anything like that. And you're just paying longer than you had originally planned. Now, that's not a great deal for the bank, but it's a great deal for you. I can explain, there is actually in our terminology explain series, I made an explanation why, because it has to do with the value of money. In a nutshell, money that you have today versus money in 30 years, you know, if you had $100 today, you can buy a certain number of things with $100. Now imagine how much less you can buy with that same $100 in 30 years from now. So moving this money that you were supposed to pay in the last 18 months to the end is actually a good deal for you, but it also helps the bank because, as I said earlier, they are no longer interested in owning properties, especially properties out of foreclosure that typically are harder to sell. So if you take those two things in account, together with the fact that the number of mortgages that are in forbearance is already small, then the impact to the overall market will be relatively minor. And what the media is also missing in this whole game is when, out of some reason, none of these options, refinancing, selling it, getting to the equity, putting the payment that you didn't make to the end of the mortgage, which if there is some crazy case where none of that would apply to you, then under normal circumstances, the first time this possibility for really a sale under foreclosure would be possible is sometime early next year. And not in September, October, November or anything like that, like some of the media might make you believe. Now, let's just say, for the sake of argument, that 10% of all these forbearance mortgages right now, out of those 1.4, 1.5 million, would actually not find a way to solve their issue and they would really go on the market. So let's say, being generous and say 150,000 of those things will actually go into forbearance. Every year, we need to have 750,000 new properties as a minimum, and the market turnover is millions of property a year. So if those 150,000 foreclosure properties come on the market as available for sale, it's like literally a drop of water on a hot oven plate. It's just going to evaporate into the market and not even make a dent. So anybody who makes it sound like, oh, when we have these forbearances and then all these houses come on the market and suddenly there will be millions of new houses that didn't exist to be bought, currently not true. So the eviction thing, I think, is a moral and social issue that should be handled differently, should have been handled differently from the get-go. Now, I'm also at the same time saying what's not okay is not to have any kind of provision that landlords are being made whole in an easier way. Right? We are providing, as the owners and landlords, we're providing something to our tenants And even if it's not their own fault, they don't pay, it's not okay to say, well, ultimately you might lose 10,000, 15, 20,000 or more dollars just because we had a pandemic and we couldn't figure out a way, when everybody got money, and you know who I mean, who got the most money. And then the people who actually provide space, shelter, houses for people to live in potentially have to hold the bag because they couldn't figure out how to do it. But again, I don't think it's nearly as bad a situation in numbers as it is being made out. But I still think the eviction situation is really bad. The forbearance situation is completely overblown, and I would just recommend for you to keep an eye on it, track along. But you will see, if we do another video early next year, like February, March, to say what actually happened to the forbearance scare that the media made us to buy into, you will find out it was like a drop of water on a hot oven plate. It just poof, went away. So this is a little bit about forbearance and foreclosures and all the stuff that we see in the video. And you can see it doesn't really make any difference which the politicians are addressing it, because they all applied the same stuff in a bad way over-regulated, and make it hard for us to actually help our tenants and develop good relationships and maintain good relationships. And the same thing for the banks. The banks would like to do this in a much different way, but they have to jump through 12 hoops as well. So I hope you're not affected in any way from either one of those two. I hope you have good relationships with your property managers, with your turnkey providers, and with your tenants, just like we do. And if you want to learn how to do this, contact us, and we're happy to share that with you. So if you like the video, give it a thumbs up. Please become a subscriber if you're not already a subscriber. Ring the little notification bell so you get notified when we have new videos coming out. So that's it for today. Be safe, stay well, and I see you in the next video.